Good evening. This is the Elliott Wave update for the S&P 500 for Wednesday, February the 2nd, 2022. Another very interesting day on the markets with Facebook, aka Metaverse, seemingly placing an atomic bomb and then detonating it under its stock after reporting earnings today. The Facebook closed at 323 and currently is trading at 252 after trading, I believe, down as low as 243. So that would put the stock down right now about $70 and had been as low as about $80. Now, in the NASDAQ, it did produce a pretty solid drop because it has a much heavier weighting. I'm not sure what the weighting of Metaverse is here in the S&P, but the stock did, or the S&P did close at 45.86 approximately, and finished the after-hours session at 45.48.50. So it is getting a reaction off of Facebook, but managed to hold higher levels on the day. And that was basically, I'm not sure which particular component continued to carry it. I know Google may have put some power underneath it, but the Dow also closed up fairly strongly. In fact, even after hours, managed to continue to hold higher levels and actually move a little bit higher. So there must have been additional reports from components of the Dow that bolstered the index. Now, what could be going on in the S&P? That's the major question. I continue to hold on to the count that I have now put in place, and that is that the intermediate wave 1, that would be off of the all-time high at 48.08. That's where the intermediate wave 1 began, did complete down here at 42.12.75. That being the case, what we are doing is that we are tracing out an intermediate wave 2. Now, alternately, this could be intermediate wave A, and we are tracing out intermediate wave B. We have not been able to really determine, because we still need more trading and more data from the S&P itself, and that's going to take us a little bit longer before we can determine is if this initial structure down off of that all-time high is going to form 3 waves down, or whether we're going to get a 5-wave structure down. So we got the initial on a minor degree. Now we'd be looking to see if that's going to follow through and give us another 5 waves down, but on an intermediate degree. So that's still out there. It's going to take us a little while to determine that. And I'll tell you why. No matter what, after this 3-wave advance, an ABC advance, whether it is a B wave or a wave 2, the expectations would be for an additional 5 waves down, and to be pretty severe, and to move very quickly, and to accelerate to the downside, and to do damage to the prices. That all still remains in the picture, no matter whether it's an intermediate 3rd wave or whether it's an intermediate C wave. So that's what we have to look forward to. But now we still remain inside this intermediate B wave, and within that, or wave 2, and within that, we are in the minor C wave advance. Now, C waves are always 5-wave structures. So on the hourly chart, I've got to be able to count 5 waves up. So if I start and go 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3, 4, 5, it could have just subdivided it all the way up, and maybe this just finished wave 1 of C. I don't think so. I think what we may have completed up here is possibly wave 3 of C. So this would be the first leg, or the starting leg down of an 4th wave, or possibly a wave 2 of C or a wave 4 of C. Again, come on. we're not sure yet. Now, what we are seeing is that we got the S&P after hours broke back below the 20, the hourly 20 moving average, right here at 45.56. That gave us a little bit of acceleration. We'll get down to 45.40 before we bounce a little bit higher into that final few minutes of the after hours trade. So next line in line would be 45.24. Now, if I'm looking at the previous fourth, that would have to be here, at best here. So these would be my zone that I think we could get down to at least 45.35. That would be support next, which is not too much further than where we've already been this afternoon. And then we have the hourly 50 moving average at 45.24. We have additional support at, I'm not sure why this is at 100. Oh, that's that way. At 44.96, 97, we have price support at 44.75, 74, and then we have the 200 down here at 44.69. So again, if we come down and we break 45.24, I would anticipate and expect additional acceleration, at least down to that 4,400, 4,500 level. 44.96, I meant to 500. If that breaks, we do have that price support at 74, and then the zone actually extends down to the 200 at 44.69. If it breaks that moving average, again, I would expect acceleration as the selling pressure builds. Then we have 44.47, 44.28, 44.07, and 43.80. Now, when we start breaking below the high of the A wave, it raises the possibility that this C wave is done and that next decline, whether it's a larger intermediate C wave or whether it's an intermediate third wave, is then underway. So if this is a fourth wave correction, I would anticipate it holds higher levels, maybe down to here, possibly as low as that. But I would not expect it to break below here, 44.37. That starts to get a little bit iffy as to where did wave one complete, wave one of C. If it's a fourth wave, it can't cross the territory of wave one, cannot. But if I'm going to mark wave one up here, then it gets even cloudier. The limitations are even at a different level. So it just depends on how we can count out this first wave and then what essentially is completed here. Is it just wave three and this is a four and we got one more advance to go? If it's all done, boom, this all starts to break and we again go into collapse. We start to just head lower. And it really will happen quickly, and I will explain why. This was a very bullish move. This, in my opinion, was massive turnaround of we had pretty strong declines coming off. Let me go to the 30 and see if I can show it. We had pretty strong declines coming off. And even the rallies were followed. Rally, decline, rally, decline, decline, decline. So there was a lot of sell pressure. That all got reversed and it became buy pressure. We had our moments, but it remained strong into here. It remained strong going up to that level. So again, it would be all of these firms, all out of traders, again reversing back out of longs and back into shorts, et cetera, et cetera. So as this market moves and the volatility remains high, these are the situations that we walk into. As day traders, that would be perfect because I don't really care why somebody needs to switch a position or what's going on, but I care about the volatility, and that's where I want to participate. I like the volatility because it gives great trading and it gives great moves we get those moves where you could pick up a large chunk of change as the market either rallies or declines. It also puts us into an area where when that volatility occurs, if it's occurring to the downside, I would expect it when we get a bounce, it's going to take it real quick. And again, if we just get this concept in that the sellers come on, they're putting through baskets of stock when those algorithms have filled the order. And the next step would be buyers coming in looking for, there's no orders because they need to fill, because it's a computer at the market, it produces what I call a vacuum. Suddenly we're jumping up $2, $3, $4, $5 in the S&P. That, is pretty strong for S&P, and it's a large move per contract. So expect it both ways. If we get that going tomorrow, which I kind of anticipate that we will, I don't think we're going to sit and just kind of dawdle around. I think there will be some adjustments done and there will be some market movement. So again, for tomorrow, I would anticipate additional decline. I think we have support here at 39, and then the support will drop pretty quick. And then we have it down here. There shouldn't be, this is not going to provide any support. We have support at 13. We have support down here at 74. We have support at 44.80, 4,500, just because it's the big number. And then if we break 44.80, I'm expecting additional acceleration to the downside. Again, if it's a wave 4, this is the previous 4. This could be the previous 4. So coin toss. Let's pay attention. Let's be aware of where the market may find its support to reverse or blast through and let you know that it's going to head here, that it's heading here. The market will tell us. Okay, this is where I'm going to leave it for right now. Continue to trade smart, continue to trade using the Elliott, using the Fibonacci, using the moving averages. The moving averages guide our trades all day long. They will continue to benefit us. And when we're using them on the near-term charts, on the short-term time frames, like a 1 minute, a 2 minute, a 5 minute chart, they're active all day long, breaking and being recovered all day long. Our next update will be on Wednesday, February the 3rd.